Chris and Celeste, welcome back. We're going to be talking about estate planning, family legacy, how to blend insurance and all the fun financial products into optimizing your future better. Obviously, you guys do this at a very high level with ultra wealthy people and families. And so not only will you make yourself available to continue to serve those people, but you're giving some of the information that's just held for the ultra wealthy, and we're making it more consumable on YouTube. So thank you for being on the show, and I look forward to diving in and start learning.
Thank you for having us.
Yeah, thanks for having us. Really appreciate it. Yeah, today we're excited to talk about a different way of thinking about how to use life insurance and a way to benefit not just, say, the next gen, but the generation after that, the generation after that, and the generation after that. There's these fun statistics out there that say that, if you have money generally, what is it? 70% of the wealth is lost in the next generation, and then over 90% of it is lost by the third generation. And so we're going to spend some time talking today about a way to sort of perpetuate that wealth, give some advantages to those generations you may not even know yet, and doing it in a really, really efficient manner. So yeah, that's what we're going to talk about today.
Can't wait.
So in this one, normally we have like 72 boxes in there because we have a lot of fun. And this way we have two real boxes. One is a Dynasty trust and one is life insurance. And you'll see the color coding at the top and what those, I'm going to call them structures or entities, what those things can actually do for you. So again, the Dynasty trust is going to provide a lot of asset protection. It's also going to provide those controls that Celeste was mentioning, right? So if you put assets inside of a Dynasty trust, it does add a layer of protection because you don't own those assets anymore. The trustee does. So if you get sued or somebody tries to attach you like a creditor, it's going to be very difficult for them to get into the trust. The reduction of estate taxes, obviously, if it's inside a trust, that is not going to be part of your taxable estate for estate taxes. So that's another benefit there. And then you have, the multi-generational aspects of it, which I think is the key for this one, because again, we're looking for a solution that works not just for generation 2, but 3, 4, 5, and 6. And so you can set up these trusts that have these guardrails. They give you that after death control, if you will, as you put it, Celeste, that, you can say this is what the trust, this is what the assets inside the trust can be used for all future generations. And so then you're able to have that control. And then you pair that with, say, a life insurance policy. And we're going to get into how we're really using the policy here in a second, but I just want to kind of point out again, sort of the advantage of this. And Caleb, I know your audience knows a lot about this. Again, life insurance adds asset diversification. It can be uncorrelated to the marketplace. It does provide cash. It does provide multi-generational benefits because ultimately the death benefit is paid out to the next gen. And if it's in trust, you're getting the additional benefit of that working for multiple generations. And then a lot of states, with life insurance, it does offer additional layers of asset protection as well. So again, if you have creditors, it's really difficult for them to pierce a life insurance policy and the cash value inside of it. So when you have these individually, they're very, very strong on their own. You put them together and they're wildly powerful together. Again, one part control, second part liquidity, third part multi-generational aspects.
And I would also add tax efficiency, right? Because the death benefit gets paid out tax-free that inside of the trust. I get that question all the time. Well, if it's in the trust, is my family going to have to pay taxes or future generations? But having it in the trust continues to perpetuate that tax benefit over time as well.
Totally. Yeah. I mean, I feel like almost all of our policies, especially on the permanent side, are owned in trust. It's just, it just makes so much sense. Dynasty trust, at the end of the day, you just have to think about it being this bucket that you're putting assets into it. You're giving assets to it. When you do that, the technical term is that you're using a generation skipping gift to the trust. And all that means is that whatever you put into the trust, as long as you say this is a GST gift, that asset inside of that trust will not be subject to estate taxes, essentially into perpetuity. And that's the huge advantage there is that, if you just gave assets to your kids, those assets that you just gave them are going to be subject to estate taxes. And then since they have it themselves, if they grow it, then they're going to be subject to estate taxes when it goes to the third generation. And so if you can plan and you can move it into a trust, all that stuff is now off the table.
Let me ask you this. Is this just for people that want to think next generationally, or can you use a Dynasty trust and still have access to that money while you're alive? And if you're going to address this in future slides, let's keep moving. I just, wanted to ask maybe an obvious question for some people watching this, being like, that's great. I don't want to pay estate taxes, but I also want to live my life.
Yeah, you want to have access to it.
Check both those boxes, or is it one of those things where it's really for next generational thinking?
Yeah, so the way that we're using it in this presentation, it's really for future generations because we're using just solely life insurance and really using a death benefit approach to it. So getting access to it, if you're the one giving into it, isn't as paramount, I would say. There are certain trust structures, though, that might allow for, say, your wife or your husband to access it. So you can kind of get that indirect access. And there's other specialized trusts out there that maybe you can't gift to it, but you could sell assets to it that you could benefit
We talked
from.
last time about household trust, and I would imagine that is a strategy that could be used. What I'm seeing is the Dynasty Trust is a container to make sure that the money that you pass on won't have to pay estate taxes. And the idea with Dynasty is like, it's just multiple generations. And so it's people that have wealth that are like, I want to keep this within the family and make sure that doesn't get eroded when it comes to taxes after I die or after my kids or their kids die. It's the idea of creating a multi-generational dynasty, properly named, in my opinion.
Yeah, but you bring up an important thing for people to be aware of, because these trusts are generally what we call irrevocable, or pretty much all of the time, right? And so what that means is that once you transfer whatever you put in there, and they're also flexible, you could put in, real estate, investment, business interest. There's so many things. In this case, we're going to be talking about life insurance, but it's flexible as far as what you can put in. But think about what you put in is not going to come back out to you, because you have now given it up so that you can benefit from the tax savings yourself. If you have what we call a taxable estate, which means you have enough net worth to where you're paying estate taxes, some people call it the inheritance tax, then now you've put that out of your estate, you've reduced your taxes, but you really have to give it up in order to have the tax benefit. So what do they say? You can't have the cake and eat it too, right? So if you're going to put it in this bucket, you really have to be willing to give it up. And so it's crucial that if somebody is setting up a dynasty trust, they're not just putting things in there to use it as a tax shelter. You have to be aware that you are going to give up that direct access to it. We call it being trust poor. You don't want to be trust poor, right? You have to have other assets to live off of or to use, not what is put into the trust. Consider it gone. Consider it's not part of your money anymore.
Yeah, I agree with all those points. And then I think that another thing to bring up, though, is that, a dynasty trust or this type of irrevocable trust isn't just for the super wealthy. If we kind of go back and talk to one of the points we made earlier about having that kind of control over your assets for multiple generations. So that can apply to anybody, really, right? And so if you have the wherewithal, the desire to have that wealth sort of perpetuate, into perpetuity for your children, grandchildren, all future generations, then you can use this same structure. It's just, so the estate tax may not be as relevant, but that control might be. So there's a different way to look at it as well. So it's not just for the super wealthy, this kind of a structure. Here's the idea. There's a lot going on this slide now that I'm kind of looking at it. But essentially what we're trying to do is say, if you acquired life insurance and you got it on everybody in the current generation, and then anybody living in the second generation, you got it on them as well. And in this example, we're saying, look, just get a $250,000 whole life policy. This isn't a complicated approach. This is pretty bread and butter and simple. Go get a $250,000 insurance policy on each one of these people. Well, what will happen inside of this trust? And well, as you can see, over time, when they hit that age 85, which we're using as a blanket life expectancy, it's creating over $12 million in death benefits. It's going to be able to use for whichever generation is after them. And so if you break that down to its dollars, that's putting $1.5 million in. It's getting over 12 million out. So it's an 8x return. And if you take some of that money, whenever it's paid out, and then use that to buy insurance on the newborns and those family trees, all of a sudden you have this pool of money that continually perpetuates itself. And it's almost like a family bank that you're creating into perpetuity, right? Like this trust literally becomes the family bank for the entire family. It's going to have lots of cash in it. It's going to allow all the future generations to have that entrepreneurial entrepreneuristic spirit, because they're going to be able to say, hey, I would like to borrow out of this fund. I want to go start a business. Or maybe the trust will allow them to use it for education. Who knows what education costs are going to be in the future? We talked about that a second ago. It might be 2, 3, 4 times what it is now. But if that pool's here, that's great. And again, you're going to have all the guardrails because it's that irrevocable trust. And so this type of a setup, it does so many things because it gives all the advantages in the world to the family. It ensures that there is always wealth perpetuated downstream, and it is really cost efficient to get. So it doesn't matter what happens in the markets. It doesn't matter what happens with the family business anymore. If you follow this structure and you stick with it, there's always going to be money for generations in the future. It's just a really cool way of, again, ensuring sort of the livelihoods, if you will, and protection for all future generations and all the things that they're going to want to do. It's a really, I think it's a really cool approach. And you can see it like in this example, there's ages all across the board as we started going down this road. We've done this for, very small families, and we've done this for large family offices too.
Celeste, do you have any questions or thoughts? Because the one question that pops into my head is this whole concept of like, what would the Rockefellers do and Rockefeller Trust? Is this a version of what they do? Obviously, maybe a little bit more advanced, but is this a version of? I mean, not that you're calling this a Dynasty Trust, but could someone call this a Rockefeller style strategy on how they're keeping money in the family?
Yeah, I mean, pretty much. It's a version of it. You're absolutely right. I think the key thing to remember is that on this, it's really going to benefit like 2-3 generations down. And that's when you're really going to start to see that wealth perpetuated really grow. And another real great advantage of this is, once again, that tax benefit. So it grows faster than it would outside of the trust, because once again, you don't have all that tax exposure that it would have otherwise. So I think it's somewhat like the Rockefeller strategy, but also, especially as they're getting it started, it's really going to benefit like 2-3 generations, because you have to give the death benefit time to grow. You have to have the death benefits paid out into the trust, but it gives them a lot of flexibility. Like we've seen some of these dynasty trusts that have been around forever that'll give a distribution when somebody gets married, when somebody buys a house, for education, to start a business. I do have a funny story though. I would say advice to your audience, if they are setting parameters inside of these trusts to ensure it's used smartly. Chris has already heard this story, but we have a family we worked with a few years ago where there was a distribution from a trust when you got married, but it didn't say you only had to get married once. And so one of the grandchildren has made a business out of it, essentially. And so I want to say the distribution is like $1 million or so. So he will now, find himself a spouse and say, I'll give you a couple $100,000 to marry me. They'll be married for a little bit. They get a divorce. He gets married again. And every time he gets a distribution, because there's nothing in there that says you just have to get married once. So also think of your intention as you're setting this up. Like, is the intention, I want to help my future generations start a family? Then, set parameters around that, while still having some flexibility, right? But just one example of things to keep in mind with the future generations too. They get smarter and smarter too.
I think Charlie Munger said, "Show me an incentive, and I'll show you an outcome."
Yeah,
You gotta,
exactly.
And how you
Exactly.
do this. Maybe you have your version of a child tax credit, but that could even backfire. It's like, hey, you want to have a kid with me so we can take advantage of, so you got to make sure that the outcome is something that you can reverse engineer.
I think this guy's been married 7 times now. So yeah.
All right.
Oh,
well, that's I don't know if that creates more hope or less hope in humanity, but question is, what's the smallest net worth you've seen this work in a family? Like, obviously, if someone doesn't have much money, they should be focused on other things, creating more cash flow and maybe investing. But what's the minimum net worth that you've seen where people done this and it's made sense to hire a company like yourself to set up a Dynasty Trust?
Yeah, sure. No, it's a great question. And I feel like most people kind of target, what is the estate tax exemption? And that's when it starts making sense. And obviously I kind of alluded to before, I kind of disagree with that, because I think that if you have intention to want to benefit your family into perpetuity, but this can really work at the Yeah, I mean, in theory, it could work at any level. Like, you've got one kid, it's just one insurance policy, and you start there, right? I think that if you're trying to do this and you've got a really big family, I mean, okay, sure, maybe you need to be 5 million or something. I don't know, but I think this kind of an approach is wildly scalable if you really have the intention of benefiting in a perpetuity.
I agree. If we're just looking at the letter of the law, not paying estate taxes, you could answer that. But this really comes down to, how do we create sustainability past the next generation? I personally was involved in a family, like helping them. And I saw that the intention fell apart because there wasn't a structure like this. The intention was this whole concept of each generation, insurance, family banking. And it just didn't happen because there was not this type of structure to make it happen. And so it just this family was not worth 20 plus million bucks, but it just shows you like there was that desire, and having something like this in place would have really helped make that happen. So we can continue to move on, but I appreciate this slide and appreciate some of the things that we've gone through.
And also for your audience, I mean, if they have young children and they're still, dual income households like many of us are, and just kind of working through it, getting small policies on your children to start to build this, is something to think of, because those premiums are going to be minimal, but it's kind of like you have to start somewhere, right? Something to keep in mind, though, is there is cost to setting up the trust. So it's finding somebody that can develop it. There's some ongoing tax considerations as far as, reporting considerations. I'm sorry. So just things like that to know, but it's nothing super, it's not anything that's like too invasive or that's hard to manage. It's just things that you need to know. And I would say anybody can really start, even with just small children, if they want to start creating that own wealth for their own future generations.
Yeah. And I think that, to the point earlier, why you would work with wouldn't it make sense to work with a group like us, like one piece, language matters, right? So to Celeste's point about, how are you actually going to build out those guardrails and not have maybe unintended consequences of what you're trying to build for better or worse. That's a good reason to work with a firm like ours that has seen, over and over, sort of the good and bad of those types of structures.
No, I'll just point in, there's links down below if you want to learn more about what it would like working with a firm like Rob and Glenn, or if you want to learn more, you can check out the links below. So go Celeste. I just wanted to add that before we end this video.
Yeah, no, absolutely. I was going to say, you can also create good humans through things like this, because you can put things in the trusted state. Like, I want you to spend X amount of money every year to have a family reunion, or I want you all to come together and put this towards a nonprofit that you all pick. So it's also a great way to build some family unity and values over time, which unfortunately we also see a dilution of that. If they can build that intention into the language as well.
Yeah. And, some of the families we work with as well, this is kind of, going back to storytelling a bit. So, divorce is oftentimes brought up as one of the reasons that somebody might look at a trust to make sure that wealth stays intact. Another one is sort of like drug and alcohol abuse, right? So a lot of people will put in measures inside of the trust that say, if they're, abuse around alcohol or there's drug issues, and that's really where the pull or the desire to want to draw from the trust to get cash for, like those types of things can be mitigated in here. And I think a unique approach about this is that if you get insurance on somebody at a very young age, those issues don't become problematic for getting a life insurance policy. And even if that individual can't get access to it because of how the trust is structured, future generations are still going to benefit from that person. So, it can be an unfortunate situation that can turn into something good, because we've seen a lot of scenarios where, a member of Generation 2, they have a couple of kids, but they have a problem, and this kind of helps sort through those things and provides really long-term benefits, right, for that family, that particular branch when those types of circumstances pop up. So what's been accomplished in this kind of structure? I mean, I'll bullet point it out real quick, but I think we've hit on a lot of them already. This is creating perpetual family income and protections, right? Preserving family wealth. We're making sure that generational dilution is minimized. We don't have to worry so much about it anymore, because again, the family is just going to re-up every time. Significant impact in future generations. We're not having to worry about market volatility anymore. If we're just worried about having that life insurance death benefit in there. It doesn't matter if Bitcoin skyrockets to 80 or 90,000 and then next week, maybe it goes to $10. I don't think it will. But just using that as an example, that doesn't create, a future problem for future generations because they're protected because they have this uncorrelated asset class that's going to, again, perpetuate that wealth and create that predictable outcome. And then the other part about this is that, as this starts maturing, it becomes self-fulfilling and that you'd be able to use part of the death benefit for one gen to pay for death benefit on the next gen to really help move all of that forward, again, without necessarily disrupting any of the investments maybe the trust is up to.
That's why E8 starts cooking with gas third generations and on. Like I can't it's definition of safe leverage.
Safe leverage. Yeah.
Death benefit within the structure is pretty incredible.
Yep. And there's a lot of ways to slice it. This one was more death benefit oriented, but I mean, in theory, if you wanted to kick it up for G1, as you know, Caleb, you can fund policies differently so that maybe it's maximizing cash value for the benefit of G2 so that they feel that that's got that living benefit to them now and to start the death benefit one starting G3. Again, there's a lot of ways to slice this up to make it work for families.
I think I know the answer to this, but I want to just validate it is if someone's watching this and maybe they have life insurance that they own personally on their spouses, maybe they have policies on their kids. I'm a good example of this. You can get those policies, get a structure like this in the future and make sure you're good. You don't necessarily need the structure. And then you can, I guess my question is, if you already have existing life insurance, it can be transferred into a system like this. Is that correct?
Correct. Yeah. Yeah, there's gifting that you can do. You can gift the policies into a trust. In some cases, we have them sell it. It's just different ways of doing it, depending on what makes sense. But if it's smaller policies and they can just be gifted into the trusts. Okay.
And I'm not saying this is not where no one on this video is giving investment advice or insurance advice or tax advice. But I sometimes people, and I've talked to some of these people, they want to do it right the first time, and it almost creates, it almost paralyzes them to take action. And it's you're never going to regret, well, I should never say that, never. Most likely you're not going to regret protecting your family and starting to save money. And you might not have this structure set up the quote unquote right way, but that doesn't mean the decisions that you make today take away from that. They can all compound towards that thing. So that's just an encouragement to get insurance. Getting insurance on kids, great idea in most cases. And this thing, just make sure that especially after you pass away, that you continue the momentum, because a lot of times while you're alive, you can be the driver, but who's going to be the ultimate driver when you're not there? This ensures that what you want to happen will happen no matter what happens to you.
Another thing too to know if you're getting insurance on children, most insurance companies require that you have insurance on yourself already because there's limits on what you can get for children. So even if you don't, consider getting a term policy for yourself, something that can be inexpensive, just so that you also have the ability to get something for children as well. Because insurance companies, most of them are not going to let you just get insurance on children if you don't have it on yourself already.
Yep. Well said.
That's a good point.
Chris, any last words or final thoughts as it relates to life insurance and Dynasty Trust?
Yeah, no, I think you wrapped it up actually in your statement very, very well. Again, it's just an awesome way to protect against unforeseen things that we're not even going to fully understand today for all future generations, from how they're going to deal with, their own income and job opportunities, how they're going to pay for things like education, how they're going to deal with their own long-term care issues and start funding all of those things that are just going to continue to grow and grow and grow. And so if you can use a structure like this to give every opportunity to future generations and then help protect those things that we're not going to understand, your family's going to be way ahead and winning. So
yeah, love it. Well, Chris and Celeste, thank you. We'll have, again, info down below. And if you're interested in eventually having a conversation around what does this look like, setting this stuff up, we'll have a link where you can start that process. And so, again, thank you for just being a part of the series. And I look forward to diving into topics like premium finance, split dollar cases, why do companies and banks have life insurance? And so I'm sure we're going to be able to talk about all that and more. If you're watching this and you're like, I would love Chris or Celeste to have a presentation around X, Y, or Z, please let us know in the comments, because we read your comments and we will do whatever we can to add as much value to the listener. So guys, thank you.
Thank you so
you.
much.